Spain just did something that no other NATO nation dared to do. And when Trump found out, he didn't send a warning. He didn't schedule a meeting. He picked up the phone and said 3 words that just sent shockwaves through every European capital. Cut it is off. What Spain did behind closed doors may have just started something that none of us are fully prepared for. Welcome back, my friend. You're watching Currency Archive, the channel where we separate the noise from what actually matters. Now, if you've been with us for a while, you already know we don't chase headlines here, we decode them. And if this is your first time here, think of us as that one wise, experienced friend who tells you what the news isn't saying. So do me a favor. The way you do a favor for someone who's been around long enough to know what really counts, hit that subscribe button. It costs you nothing, but it might just be worth everything. And before we go further, drop a comment below and tell me, where in the world are you watching this from today? Because trust me, where you are right now matters more than you think. The room went quiet. Not the kind of quiet that happens when someone says something forgettable. The kind of quiet that settles in when everyone in the room realizes something has just changed. It was a routine press conference. Reporters had gathered, cameras were rolling, and the questions were flowing in the usual controlled chaos of a White House media moment. But then a reporter asked about NATO, about Europe, about who was cooperating and who was not. And that is when President Donald Trump said something that no European capital was prepared to hear. He said Spain had been terrible, not difficult, not uncooperative, terrible. He then turned to his team and confirmed that he had already instructed officials to cut off all dealings with Spain. And before the press pool could fully process those words, he added the final blow. The United States was going to cut off all trade with Spain, every transaction, every agreement, every arrangement. Gone. To understand why those words carry the weight they do, one must understand what brought the relationship to this moment. It did not happen overnight. It rarely does with geopolitical fractures. They build slowly, quietly, beneath the surface, until one day a single press conference pulls back the curtain and reveals how deep the damage actually runs. The story begins with NATO's defense spending framework. For decades, member nations agreed to contribute a minimum of 2% of their GDP toward collective defense. Most nations struggled even to meet that threshold. Then, Trump returned to the White House with a far more aggressive demand, 5%, not a suggestion, a requirement. Germany agreed. France moved toward compliance. Smaller nations fell into line, understanding the political reality of the moment. But Spain did not move. Spain stayed where it was, offering explanations rooted in domestic budget pressures and political positioning. And while other European capitals were recalibrating their defense budgets and signaling Washington their willingness to cooperate, Madrid remained unmoved. That was strike one. But the NATO spending refusal alone might have been manageable. Diplomatic channels exist precisely to manage these kinds of disagreements. What turned a political disagreement into a breaking point was what came next. The United States needed access to Spanish military bases for operational purposes. The request was made through proper channels, as these requests always are. Spain said no. For Washington, this was not simply an inconvenience. This was a message. A nation that refuses to fund collective defense and then refuses to allow operational access to its military infrastructure is not behaving like an ally. It is behaving like a nation that has made a quiet but deliberate choice about whose orbit it wishes to occupy. Trump made that calculation publicly. He stated plainly that the United States could use those bases regardless, that no one would stop them from flying in if they chose to. But that was not the point. The point was that Spain had positioned itself as unfriendly. And in Trump's strategic language, unfriendly nations do not receive the economic benefits that friendly ones do. This is where the business community must pay extremely close attention. Because what Trump issued was not a diplomatic protest. It was not a strongly worded letter. It was an economic ultimatum delivered live, on camera, in front of the world. The language he used was surgical. He did not say relations were strained. He did not say negotiations were ongoing. He said the United States does not want to have anything to do with Spain. He said Spain has absolutely nothing that America wants. He said trade would be cut off entirely. These are not the words of a negotiator leaving the door open. These are the words of a decision maker who has already made the decision. For entrepreneurs and business leaders watching this moment unfold, the question is not whether this is serious. The question is how serious and how fast. Because when the world's largest economy announces it is ending all dealings with a G20 nation, the clock does not pause while the world debates whether it is real. The clock is already running. There's an old principle in geopolitics that the most dangerous moments are never the ones that appear suddenly. They are the ones that were always coming, and nobody was watching closely enough to see them arrive. The US-Spain fracture did not begin on the day Trump stood before those cameras and delivered his warning. It began much earlier, in budget meetings, in parliamentary debates, in quiet diplomatic exchanges that never made the headlines, in a series of small decisions made in Madrid that collectively sent one very clear signal to Washington. Spain had chosen a different direction. To understand the depth of this fracture, one must go back to the architecture of the NATO spending debate, not as a political argument, but as a financial commitment that separates serious allies from symbolic ones. When NATO established the 2% GDP defense spending benchmark, it was understood by most member nations as a floor, not a ceiling, a minimum standard of seriousness. For years, many European nations failed to meet even that modest threshold, and Washington tolerated it, sometimes impatiently, but it tolerated it. Then the calculation changed. He demanded 5%, and he made clear this was not a request open to years of diplomatic negotiation. It was a condition. Germany understood. Chancellor after chancellor had already begun shifting Berlin's defense posture, understanding that the transatlantic relationship required visible financial commitment. France recalibrated. Poland, already facing its own eastern pressures, moved aggressively toward compliance. Even nations with far smaller economies found ways to signal their seriousness to Washington. Spain did not move. Inside Madrid's political establishment, the reasons were framed around domestic priorities. Spain's economy carries significant public debt. Its unemployment structure has historically been among the most complex in the Eurozone. Its current government operated within a coalition framework that made aggressive military spending politically difficult to justify to its own voter base. These were real constraints. But here is what the business community must understand about geopolitics. Real constraints do not change how they are perceived from the outside. Washington did not see a government navigating difficult domestic politics. Washington saw a pattern, a nation that consistently found reasons not to contribute, a nation that positioned its internal political calculations above collective alliance commitments. And over 24 months, that pattern hardened into a conclusion. Spain was not a reliable partner. Then came the base denial, and this is where the fracture became irreparable in the short term. Spain hosts one of the most strategically significant NATO installations in the entire Mediterranean region. The Rota naval base, situated on Spain's southwestern coast, provides the United States with direct access to Atlantic and Mediterranean operational theaters. It is not a symbolic presence. It is a serious strategic asset that has been a cornerstone of American naval posture in the region for decades. When Spain denied the United States access for a specific operational requirement, it was not simply an administrative decision. It was a signal read by every intelligence analyst, every strategic planner, and every senior diplomat in Washington with absolute clarity. An ally does not deny base access. A nation quietly repositioning itself does. The European Union now finds itself in an extraordinarily uncomfortable position. Brussels cannot publicly abandon Spain. It is a founding member of the Eurozone, a significant economic contributor, and a politically influential voice within EU institutions. But Brussels also cannot afford to position itself against Washington at a moment when transatlantic trade relations are already under enormous pressure. So the EU is doing what institutions do when they have no good options. It is saying very little and hoping the situation resolves itself. It will not resolve itself. Because what Trump's warning revealed is not a bilateral dispute between two nations. It is a preview of the new framework governing global alliances, one where economic access is directly tied to strategic cooperation. For every entrepreneur and business leader building exposure across European markets right now, this preview deserves their complete and undivided attention. Numbers do not lie. Politicians spin them. Analysts debate them. Governments bury them inside reports that nobody reads until it is too late. But the numbers themselves, the actual figures sitting inside bilateral trade agreements, investment portfolios, and sovereign debt structures, those numbers tell a story that no press conference can rewrite. And right now, those numbers are telling a very uncomfortable story about Spain. Most people who watch Trump's warning replay across news channels focused on the politics, the tone, the confrontation, the headline. That is exactly what casual observers do. They watch the surface of the water and miss everything happening beneath it. Serious decision makers do not watch the surface. They go straight to the architecture. So let us examine exactly what is sitting inside the US-Spain economic relationship, and what begins to crack the moment that relationship comes under the kind of pressure Trump just applied publicly. The United States and Spain conduct approximately $25 to $30 billion in bilateral trade annually. That number alone places Spain comfortably among America's significant European trading partners. Spanish exports moving into American markets include pharmaceuticals, machinery, automotive components, olive oil, wine, and a range of specialized manufactured goods that have built decades of supply chain dependency on both sides. But here is what matters more than the headline trade figure. It is not just what Spain sells to America. It is what Spain needs America to keep buying. Spain's economy is structurally dependent on export revenue in ways that make a U.S. trade severance not merely inconvenient, but genuinely destabilizing. Spain's manufacturing sector, its agricultural exporters, and its pharmaceutical industry have all built significant portions of their revenue models around American market access. Losing that access does not mean finding a replacement next quarter. It means restructuring entire business models over years, while the revenue stops immediately. Then there is the investment architecture. And this is where the story becomes particularly serious for the global business community. American capital has a deep and long-standing presence inside Spain's economy. U.S. firms operate across Spanish banking, real estate, technology, and infrastructure sectors. Private equity exposure is significant. Institutional investors hold meaningful positions in Spanish sovereign debt and corporate bonds. These are not casual financial relationships. They are structural ones, built over decades and embedded into the operational fabric of Spain's financial system. When a political warning of this magnitude is issued publicly, institutional money does not wait for the situation to resolve. It begins repositioning immediately, quietly at first, then with increasing urgency as the signal becomes impossible to ignore. The smart capital always moves before the headlines confirm what it already sensed. There's another dimension to this story that receives almost no attention in mainstream coverage, and it is arguably the most significant one for entrepreneurs and investors watching from outside Europe. Spain is not simply a European economy. Spain is a financial gateway. Through language, culture, historical relationships, and decades of institutional banking presence, Spanish financial institutions serve as primary conduits for capital flowing between Europe and Latin America. Santander, BBVA. These are not regional banks. They are global institutions whose operational architecture connects Madrid directly to Mexico City, Buenos Aires, Bogotá, and São Paulo. When U.S.-Spain economic relations fracture, the tremors do not stop at the Pyrenees. They travel across the Atlantic and arrive in every Latin American market where Spanish capital plays a structuring role. For any entrepreneur or investor with exposure across Latin American markets, this is not a distant European story. This is arriving at your doorstep, whether you're watching for it or not. Spain's sovereign debt position adds yet another layer of vulnerability to this already fragile picture. Spain carries a debt-to-GDP ratio that leaves very limited room for economic shock absorption. In stable geopolitical conditions, that ratio is manageable. But stable conditions just became considerably less certain. Bond markets are already reading the signal. Yield movements on Spanish sovereign debt in the days following Trump's warning were not dramatic, but they were directional. And in sovereign debt markets, direction matters more than magnitude, because direction tells you where the conviction is forming. The architecture at risk here is not simply about one nation's trade balance or one government's diplomatic miscalculation. It is about something far larger. The emerging reality that in the new global order being constructed right now, economic access is no longer guaranteed by geography, history, or tradition. It is earned. It is conditional. And it can be removed with 3 words at a press conference. History does not announce itself. It does not send a formal notice. It does not schedule a meeting. It does not wait for the business community to finish its quarterly reviews before it begins reshaping the world that those reviews were built upon. History simply moves. And the people who recognize the movement early are the ones who position themselves correctly before everyone else realizes the ground has already shifted beneath them. That moment is now. There's a pattern that serious students of geopolitical history will recognize immediately in what is unfolding between Washington and Madrid. It is not a new pattern. It has appeared before in different decades with different nations under different administrations. But its structure is remarkably consistent every single time it emerges. It begins with a public warning, delivered loudly, deliberately in front of cameras. That warning is never purely about the nation being warned. It is a message broadcast simultaneously to every other nation watching, every ally, every trading partner, every government currently calculating how closely it wishes to align itself with Washington's strategic priorities. Trump's warning to Spain was heard in Berlin, in Paris, in Tokyo, in Riyadh, in every capital where governments are currently running their own quiet calculations about defense commitments, trade arrangements, and strategic positioning. The warning to Spain was the example being made, and examples are always made for the benefit of the audience, not the subject. For entrepreneurs and serious investors, the first strategic imperative right now is to audit exposure with honest eyes. Not the exposure that feels comfortable to acknowledge, the exposure that actually exists inside portfolios, supply chains, operational structures, and business relationships that touch either Spain directly or the broader European framework now visibly under pressure. This means asking uncomfortable questions. Which supply chain dependencies run through Spanish logistics infrastructure? Which investment positions carry Spanish sovereign or corporate debt exposure? Which Latin American business relationships are structurally financed through Spanish banking channels? These questions are not hypothetical exercises. They are immediate operational priorities. Because the window between a public warning and concrete economic action is historically short. Governments move slower than markets, but markets move the moment conviction forms, and conviction formed the instant those words left the press conference. The second strategic imperative is to understand the three-move sequence that historically follows American trade ultimatums of this magnitude. The first move is institutional repositioning. Large capital, pension funds, sovereign wealth funds, major institutional investors, begins quietly reducing exposure to the targeted economy. This happens before any formal policy change. It happens on signal alone. The second move is corporate recalibration. Multinational companies with significant operational presence in the targeted nation begin reviewing their structural commitments. Expansion plans pause. New investment decisions are deferred. Supply chain alternatives are quietly mapped. The third move is the policy formalization, the moment where the warning converts into actual trade mechanism, tariffs, sanctions, formal severance of specific trade categories. By the time this third move arrives publicly, the first two have already been underway for weeks. Most observers only see the third move. They react to it as though it arrived without warning. It never arrives without warning. There is also a significant opportunity hidden inside this fracture. And serious decision makers never allow geopolitical disruption to pass without examining where capital is being displaced toward, not just away from. When American economic relationships with one European nation fracture visibly and publicly, capital does not simply disappear. It redirects. It flows toward nations demonstrating clear strategic alignment with Washington. Nations that paid the 5%. Nations that offered base access. Nations that position themselves as reliable partners in the new framework being constructed. For investors and entrepreneurs willing to map that redirection carefully, the fracture creates positioning opportunities that would not exist in stable conditions. Disruption always displaces capital. The question is never whether opportunity exists inside disruption. The question is whether one is positioned to receive it or simply exposed to it. The UK parallel running simultaneously alongside the Spain situation deserves specific attention here. Trump dissatisfaction with Britain, expressed in the same press conference, almost in the same breath as the Spain warning, signals something that should not be overlooked. Two major European allies receiving public warnings simultaneously is not coincidence. It is architecture. It tells the serious observer that what is being constructed is not a bilateral dispute with Spain. It is a new framework for how Washington defines and rewards strategic partnership across the entire alliance structure. The old assumptions about transatlantic relationships being permanent, self-sustaining, and immune to fundamental restructuring, those assumptions just became extraordinarily expensive to hold. The business community, the aspiring entrepreneur, the serious investor, none of them can afford to analyze this moment through the lens of conventional diplomatic commentary. The commentary will focus on the drama, the personalities, the political theater. Strip all of that away. What remains is this: the world's largest economy has publicly announced it is willing to sever economic relationships with a G20 nation over strategic noncompliance. That sentence should be read slowly and then read again, because it does not only describe what happened to Spain, it describes the new rules that every nation, every business, and every investor now operates under.